First, I ask that the quorum call be rescinded.
Without objection.
Madam President, I ask unanimous consent that Ashley Stevens and Anna Eston of my staff be granted floor privileges for the duration of today's proceedings.
Without objection.
Madam President, I've come to the floor on numerous occasions this year to discuss the distressed state of America's middle class. In fact, on our committee, we've had a series of hearings looking at the state of the middle class and what's happening to the middle class in America. In recent decades, our nation's once secure middle class has struggled in the face of stagnant wages, declining job security, rising indebtedness, and disappearing pensions, not to mention sharply higher costs for health care, education, food, and energy. But, Madam President, it wasn't always this way. In the 3 decades after World War II, America's middle class grew rapidly. Incomes rose steadily as the middle class secured its fair share of the expanding national wealth. The federal government invested generously in infrastructure building, innovation, education, vastly expanding opportunity for people to move into the middle class. America became a more equal, fair, and just society built on a solid bedrock of a strong middle class. I am an example of that. My father had an 8th grade education, was a coal miner. My mother was an immigrant with very little formal education. Yet their 3 children were able to go to good schools, get good jobs, and get an education. All 3 of their children graduated from Iowa State University, a great land-grant college, because it didn't cost very much. We could afford to go there. And we were able to enter the middle class from those humble beginnings. But beginning in the 1970s, much of that progress started to come to a halt. Our manufacturing base declined. The U.S. economy became increasingly dominated by financial markets and Wall Street, a trend that was accelerated by ill-advised deregulation. Soaring profits and sky-high salaries attracted more of our nation's best and brightest to pursue careers in science at the expense of engineering and teaching, public service. Wall Street bankers were emboldened by deregulation. They were incentivized by huge salaries and bonuses to take ever greater risks, and they devised ever more exotic and risky investment schemes. As we all know, in 2008, this frenzy of greed and recklessness culminated in the catastrophic meltdown of our nation's financial system. This economic crisis was a hammer blow to our already struggling middle class. The value of Americans' homes and retirement accounts plummeted. Millions lost their jobs or were forced into a foreclosure. Hopes for the future dimmed. In the wake of this financial crash, with its pervasive collateral damage to the middle class, the American people demanded action to rein in the worst abuses of Wall Street and to prevent a replay of 2008. This led to the Dodd-Frank Wall Street Reform and Consumer Protection Act. Let me repeat that, the Wall Street Reform and Consumer Protection Act, the most sweeping reform of our financial system since the Great Depression. For hundreds of millions of American consumers in their everyday lives, no aspect of this law is more important and transformative than the creation of the Consumer Financial Protection Bureau. Again, read the words of the legislation. It's the Wall Street Reform and Consumer Protection Act. Therefore, a big part of the bill was to build in consumer protections. One of that was to create the Consumer Financial Protection Bureau. I've come to the floor today in strong support of the nomination of Richard Cordray to be director of this Consumer Financial Protection Bureau. Now, the idea behind this bureau is very simple. We need a cop on the beat looking out for the best interests of consumers who use financial products, just as we have regulators looking out for the financial health of banks. A strong Consumer Financial Protection Bureau will ensure that consumers are not lured into debt through hidden fees, for example. It will simplify disclosures, reduce paperwork so consumers aren't faced with mountains of paperwork they can't understand. It It will oversee providers of consumer credit, such as payday lenders, which for years have acted like banks without facing any kind of banking regulation. Additionally, as student debt surpasses credit card debt as the largest source of consumer debt, which that has already happened, by the way, that student debt right now is bigger than credit card debt. The Bureau, this Consumer Protection Bureau, can play a critical role in helping families better understand the increasing challenges of facing a college education and financing it, as well as bringing some sanity to the private student loan marketplace. Finally, a key function of the Consumer Financial Protection Bureau will also provide help to our veterans through the Office of Service Member Affairs, the Office of Service Member Affairs. Sadly, too often, our service members fall victim to abusive financial traps upon their return home. The Bureau has made an outstanding choice for leadership of this office with the selection of Mrs. Hollister Petraeus. But cynically, my Republican colleagues have chosen to protect the unscrupulous lenders who prey on military families. They would rather neuter the entire agency, have no director, than to fully empower Ms. Petraeus to protect military personnel and their families from all forms of predatory lending activities. These steps are essential elements of helping to tilt the scales of our economy back into balance, so that once again we put the interests of the 99% of Americans who use financial products ahead of the 1% who profit from them. I was deeply disappointed when our Republican colleagues voted against the Wall Street Reform Bill. It should have been an overwhelmingly bipartisan bill. But now the bill is law. And guess what? My Republican friends are doing everything in their power to prevent it from doing its important job. Earlier this year, 44 Republican senators served notice they would not confirm anyone. Let me repeat, they would not confirm anyone to the position of director unless structural changes are made to the Bureau that would effectively take away its ability to stand up for consumers. The changes they've demanded are unfair and unreasonable. No other independent financial regulator has its rules subject to veto by other regulatory agencies. To suggest that the only regulator whose primary mission is to protect everyday hardworking Americans should face unprecedented levels of oversight simply does not make sense. Once again, Republicans have brazenly put the interests of Wall Street, payday lenders, unscrupulous mortgage lenders ahead of the interests of Main Street consumers. Mr. President, to restore the middle class to its place as the bedrock of our economy, we need a financial system that works for them. This means a financial system where consumers choose services based on a full and transparent understanding of the cost of those services. But absent a director, the Consumer Financial Protection Bureau won't be able to supervise payday lenders or debt collectors or private student lenders. It will be able to make it easier for the good actors in the financial system, our community banks, for example, or our credit unions, to compete against those who are making a large profit by unfairly taking advantage of unsuspecting consumers. Mr. President, Richard Cordray is a superb choice to serve as the first director of this Bureau. As Attorney General of Ohio, he was a strong but fair advocate for consumers. His work has earned him the endorsement of bankers, CEOs, and civil rights leaders across the state of Ohio. He is a public servant of the highest caliber who deserves to be given the opportunity to lead this critically important Bureau. As a matter of fundamental fairness to hardworking Americans on Main Street, we need an effective, even-handed Consumer Financial Protection Bureau. Mr. Cordray deserves the opportunity to lead this new Bureau. I call upon my Republican colleagues at long last to put the interests of consumers ahead of the interests of those whose reckless pursuit of profits and bonuses have caused so much harm to our society and economy. I call upon my Republican colleagues to ignore the legions of Wall Street lobbyists who are urging them to disable and, if possible, kill the Consumer Financial Protection Bureau. Richard Cordray is a dedicated and impartial public servant who will put the best interests of American consumers first. We should give him that opportunity. I hope that my colleagues will join me in strongly supporting his nomination. Mr. President, I yield the floor.
Mr. President.
The Senator from Mississippi.
Thank you, Mr. President. We are now, as a country, squarely in the middle of the Obama economy. It is a period of slow growth, of persistently high unemployment, with many potential workers having abandoned the playing field and simply given up looking for work. There is a growing awareness among our countrymen that the policies of President Obama, the policies enacted during the first 2 years of his administration under Democrat supermajorities, have made matters worse. We have legitimate disagreements in this Capitol concerning the solutions to the problems that we're experiencing with the Obama economy. My colleagues and I on this side of the aisle would enact aggressive regulatory reform, an expansive energy policy, and we would vastly limit the size and scope of the federal government. That is our plan, and it's a plan that we could have genuine disagreements about. What I want to talk to my colleagues about today, Mr. President, though, is what I would suggest is a manufactured dispute, and it is over this issue of the extension of the payroll tax. That is an issue on which really there is a wide consensus on the Democratic side of the aisle, over here on the Republican side, and down the hall in the other body. Now, the President said only a few months ago that it is not wise to raise taxes on anyone during a recession, and we certainly are in a recession. In recent weeks, the President has suggested that perhaps he has abandoned this position and changed his mind, and that we should perhaps raise taxes on some people, even though we're still in a recession. But Republicans have consistently agreed with what the President said earlier. We're in a recession, and this is no time to raise taxes on anyone. This means we shouldn't raise taxes on the working poor. It means we shouldn't raise taxes on employees working on the assembly line or working in the retail sector. It means that we should not raise taxes on job creators. We should not raise taxes on investors that we depend on to provide the capital to create jobs. We shouldn't raise taxes on anybody because we're in a time of recession. Now, let's put this in a historical context. Last December, at a time when Democrats still had supermajorities over here in the Senate, when Speaker Pelosi was still in charge in the House of Representatives with her majority there, this Congress, on a bipartisan basis, enacted legislation to keep in place the Bush-era tax cuts, to leave those rates in place for all Americans at whatever income level. And we also, on a bipartisan basis, enacted a cut in the payroll tax. Now, this is the Social Security tax that all workers pay regardless of income, the so-called FICA taxes that you see on your pay stubs. And last December, that tax dropped the payroll tax for employees from 6.2% to 4.2%. I supported that. Republicans and Democrats supported that. It's up for renewal, and there's a huge majority of members of the House and Senate who want to renew that. The distinguished majority leader, Senator Reid, however, has suggested that not only do we keep the lower rate of 4.2% rather than 6.2%, but we actually lower that FICA tax to 3.1%. Mr. President, we can have an extension of the current FICA tax rate. Democrats know it, the White House knows it, and the Republican conference knows it. But one problem must be addressed, and I think both parties want to address this. We need to offset the cost to the Social Security Trust Fund of these lower payroll tax rates. Why do we need to do this? Because when the law says we're really supposed to be taking in 6.2% and putting that in the trust fund to make the Social Security program as solvent as possible, when we lower that to 4.2% or to less, as the majority leader wants to do, it amounts to a drain on the Social Security system. And I think the last thing we want to do with a weak system, which we know can't come out in the end, is to put further pressure on the Social Security Trust Fund. So both parties have proposed to offset or pay for a continuation of the payroll tax cuts. You know, last week, the White House unveiled a digital clock at the top of its website that counts down to the date when the payroll tax cuts will expire at the end of the year. This somehow suggests that someone in this town wants the payroll tax to go back up to 6.2%. This is pure political gamesmanship. We can have a bipartisan solution to keep the payroll tax at 4.2%, but we must pay for it. Now, the distinguished Majority Leader, Senator Reid, had a proposal last week not only to lower the payroll tax to 3.1%, but to pay for it by raising taxes on someone else. This violates what the President said several months ago. We don't need to raise taxes on anyone. We can pay for a continuation of this, as Republicans have proposed to do, by offsetting it with smart spending cuts, a freeze in federal pay, a reduction in the federal workforce, and means testing of some benefits at the upper income levels. We proposed this last week, but it was shot down by the majority in this body with to me, a contrived plan to actually lower the payroll tax and shift those taxes to someone else. Now, we're told that this week, just like last week, we're going to have some more political theater. The Majority Leader will propose once again a tax increase on others so that we can keep this payroll tax cut. And we will propose a side-by-side, which is essentially the pay-for plan to keep the tax rate as it is. Both of these will fail because the Majority Leader intends for them to fail. And essentially, we will have wasted 2 weeks at the end of this session of Congress by creating a manufactured disagreement for the sake of scoring political points. Maybe after we get this week over with, and we've had yet another week of gamesmanship, the Senate can get down to the business of passing a simple extension of the payroll rates in their current form and to offset that action with savings. There is an absolute majority in the Senate and in the House to do just that. In doing so, we can end 3 weeks of political theater with the Democrats trying to score points for 2012. I wish we could fast forward to next week and get this important piece of legislation done and enact a continuation of the payroll taxes that a vast majority of Republicans and Democrats support. Thank you, Mr. President.
Mr. President.
Senator from Louisiana.
Thank you, Mr. President. Mr. President, last week I came to the floor and urged all of my colleagues on both sides of the aisle to come together in a common-sense, bipartisan way and extend for a significant period of time the very important national flood insurance program. That program, which is essential to the country, involves a lot of properties, essential to real estate closings, to allow that important part of our economy to happen as we struggle to get out of this recession. That program would otherwise expire a week from this Friday. I also wrote Senator Reid that same day as I came to the floor, urging him to support this legislation extending this vital program to be passed quickly, hopefully unanimously, through the Senate. Mr. President, the good news is I've reached out to many folks, Democrats and Republicans, since then. We've continued to build consensus to do that, to make sure there is no threat of the National Flood Insurance Program lapsing yet again, as it did unfortunately 4 times in 2010, no good reason, for a total of 53 days. Every time that happens, or is even threatened to happen within a few days, there is great chaos and uncertainty in the real estate market. Good closings are put off. Our economy slows down for no good reason, as we need every closing in sight to do exactly the opposite and improve the economy. Again, Mr. President, the good news is that we have built consensus, and I think we have reached consensus to avoid that sort of lapse. So I return to the floor today, Mr. President, to get that formally done. And at this point, I would ask unanimous consent that the Senate proceed to the immediate consideration of S. 1958, my bill to extend the National Flood Insurance Program well into next year to May 31st, which I introduced earlier today.
The clerk will report the measure.
S. 1958, a bill to extend the National Flood Insurance Program until May 31st, 2012.
Is there objection to proceeding to the measure? Without objection, the Senate will proceed.
And, Mr. President, I know of no further debate on this measure. I'll have a few closing comments after we formally pass it, but I urge its passage.
Since there is no further debate, will all in favor say aye?
Aye.
All opposed say no. The ayes appear to have it. The ayes do have it. The measure is adopted.
Thank you, Mr. President. I ask unanimous consent that the motion to reconsider be laid upon the table and that any statements relating to the bill appear at this point in the record.
Without objection.
Thank you, Mr. President. And, Mr. President, in closing, let me thank everyone, both sides of the aisle, who worked in a very common-sense way to get this done. Again, sort of the worst-case scenario is what we all experienced in 2010. 4 different times in 2010, the program actually lapsed, total of 53 days. More times than that, it came within a few days of lapsing and created great uncertainty in the real estate market. We don't need any of that. We're trying to struggle out of a recession and a very bad economy, which has been led by a real estate downturn. So we need every good closing we can get. And giving the market this certainty over a week before it would otherwise expire is very good as we try to create that certainty and build a better economic climate. So I'm very happy we came together in a common-sense, bipartisan way to extend the National Flood Insurance Program as is to May 31st. Let me also say in closing, Mr. President, I strongly, strongly support a full 6-year reauthorization of the program. I've worked on that bill with many others in the relevant Senate committee, the Senate Banking Committee. We've reported a good bill out of committee. I want to get that through the Senate floor. and merge it and compromise it in some reasonable way with the House reauthorization. We need a full-blown 6-year reauthorization of the program with significant reforms. But that was obviously not going to happen between now and a week from Friday. It's obviously not going to happen a month or two into the new year. So we needed to create the certainty that this extension will create as we continue to work on that full reauthorization. Thank you, Mr. President. With that, I yield the floor and suggest the absence of a quorum.
The clerk will call the roll.
Mr. Akaka.
Thank you. President, I come to the floor this evening to urge my colleagues to support legislation to extend and expand the payroll tax cut that middle-class families across America depend on. Last week, Democrats brought a bill to the floor that would have not only accomplished this goal for our workers, it would have also cut the payroll tax for half of our nation's employers and eliminated it entirely for businesses who were making new hires. To pay for this proposal, Democrats proposed a small surtax on millionaires and billionaires, that is, people who are earning more than $1 million a year. In order to extend and expand a critical tax break for middle-class families and small business owners, we thought it right to call on the wealthiest among us, those who can afford it, to pay just a little bit more at a time when the vast majority of Americans are really struggling. Our bill set up a choice, and we thought it was an easy one. Do you vote to extend critical tax cuts for middle-class families, or do you vote to protect the wealthiest Americans from paying 1 penny more in their fair share? Well, unfortunately, Mr. President, almost every Senate Republican chose to side with the richest Americans and filibuster our middle-class tax cut bill. And in a surprising development, their leadership's own bill to simply extend the middle-class tax cuts while protecting the wealthiest Americans was opposed by the majority of Republicans. Mr. President, Republicans spent months on the Joint Select Committee on Deficit Reduction saying that tax cuts for the wealthiest Americans should be made permanent, that the wealthiest Americans and biggest corporations should get even deeper tax cuts, that tax cuts for the rich shouldn't be paid for and should be simply added to the deficit, and that a pledge made to a Republican lobbyist named Grover Norquist gave them no choice but to support tax cut extensions. So I have to say I am truly disappointed to see once again that this apparent concern for tax cuts only seems to extend to millionaires and billionaires. And now that a break for middle class is on the verge of ending in a few short weeks, potentially causing deep harm to our weak economy, those Republicans who fought tooth and nail for tax cuts for the rich are nowhere to be found. In fact, many of them are actively opposing it. Mr. President, Republicans seem to be operating under the backward economic principle that only tax cuts for the richest Americans and biggest corporations are worth fighting for. In fact, they have a name for that group of people. They call them the job creators. They believe the only ones who create jobs in America are the rich, and they claim the tax cuts and loopholes they fight for that benefit the wealthy will somehow trickle down to the rest of us. Well, Mr. President, that's wrong. We know that Republican economy policy has failed us. It was this kind of thinking that turned a surplus into a deficit, that brought our economy to its knees, that failed our middle class and allowed the wealthiest Americans to amass record fortunes paying the lowest tax rates in decades. It's the wrong way to go, and Americans know it. And our country has the scars to prove it. Mr. President, a constituent of mine named Nick Hanauer recently published an op-ed in Bloomberg Businessweek that speaks to this point exceptionally well. Nick is a businessman. He's a venture capitalist in Seattle. He helped to launch more than 20 companies, including Amazon.com, and he has a deep understanding of 21st century jobs and the innovation economy. Nick wrote in that it's not tax cuts for the rich that create jobs, but that, and I want to quote him, he says, only consumers can set in motion a virtuous cycle that allows companies to survive and thrive and business owners to hire. An ordinary middle-class consumer, he says, is far more of a job creator than I ever have been or ever will be. He advocates ending the tax breaks for the rich and using some of that savings to give average working families a break and put more money in their pockets. Nick's logic is clear, and it makes economic sense. It's in line with the American public believes, and it's exactly why this middle-class tax cut needs to pass. So while I strongly supported our last bill that would have extended and expanded this tax cut on both workers and employers, it was clear that Republicans were not going to drop their filibuster. So we are back now with a compromise. Republicans claimed to be concerned that our bill was too big, so we scaled it back. They said they didn't like the surcharge on the wealthiest Americans, so we cut it down significantly and we made it temporary. And to make it even more acceptable, we included spending cuts that both sides said were acceptable, as well as their proposal to make millionaires ineligible to receive unemployment insurance and food stamps. So, Mr. President, the compromise that's before us is fully paid for. It extends and expands payroll tax relief for millions of middle-class families in our country. It will create jobs and provide a critical boost for this economy at a time when we desperately need it. So I continue hoping that our Republican colleagues will be as focused on tax cuts for the middle class as they are on for the wealthiest Americans and largest corporations. And I hope they stand with us to pass this critical legislation in time for the holidays, because that's what American families want. Thank you, Mr. President. I yield the floor. Suggest the absence of a quorum.
The clerk will call the roll.
Mr. Akaka.
shall be.
Thank you, Mr. President. Colleagues, tomorrow we're going to be voting whether to close debate on the nomination of Richard Cordray as Director of the Consumer Financial Protection Bureau. This can be framed in terms of his qualifications, but that would be a mistake because folks on both sides of the aisle have noted he's exceptionally qualified for this position. A graduate of Michigan State University, of Oxford University, the University of Chicago Law School, where he was editor-in-chief of the University of Chicago Law Review. In addition, he's held a number of public positions with honor and distinction as state representative, as Ohio Treasurer, as Ohio Attorney General. Indeed, as Ohio's Attorney General, he was an aggressive advocate for consumers. He recovered more than $2 billion for Ohio's retirees, investors, and business owners, and took major steps to help protect its consumers from fraudulent foreclosures and financial predators. What a terrific resume. An individual who has stood up for retirees, who has stood up for business owners, who has stood up for investors and said, fraud will not be tolerated. We will seek it out, and we will penalize it, and we will end it. In other words, exactly the resume of someone you would want to head a Consumer Financial Protection Department or division or bureau. So why are we voting tomorrow on ending debate? Why don't we just have a unanimous consent motion that we go to a final vote? And the answer is my colleagues across the aisle are objecting. They are objecting to a vote on his nomination, not because he isn't qualified, but because they want to prevent this agency from doing its job, protecting America's families against predators. I cannot think of many issues that are so important to the success of our families as making sure that they are not subject to financial predators. And yet my colleagues across the aisle are opposing this nomination in order to protect the predators preying on America's families. That is just plain wrong. So I hope they'll change their position before tomorrow. Let's turn the clock back to 2003. In 2003, a new type of mortgage was invented in the United States. This was a mortgage that had a 2-year teaser rate, a very favorable low rate so as to serve as a bait for mortgage originators to say to their clients, this is the best mortgage for you because it has the lowest rate. But what the originators didn't tell their clients was that after 2 years, that rate exploded to a very, very high interest rate, a predatory rate, and that they couldn't get out of the mortgage because the mortgage had a little sentence in it that said you have to pay a huge penalty if you try to refinance this mortgage. That penalty was 5 or 10% of the value of a loan. Show me a working family in America that buys a house, puts down their down payment, makes their repairs, gets moved in, and still has 10% of the value of a house sitting in a bank, able to pay a penalty so they can get to a fair interest rate after the interest rate explodes. So this new mortgage turned the humble, amortizing family mortgage that had been the pathway to the middle class for millions of American families into a predatory trap that destroyed families and that created a lot of wealth for the 1% who run the system in our society. And have no doubt that 1% got in every possible way. They said, well, let's take and package these predatory mortgages and sell them. And then let's take pieces of those packages and combine them with pieces of other security packages and resell them. And then let's develop a brand new insurance industry that insures securities. This insurance is what's often called credit default swaps, or derivatives, fancy names for an insurance for these packages of mortgages, and then let's thereby make them very attractive to pension funds and investors across the world, actually. And this was so successful that those who were buying those mortgages were willing to pay a huge bonus to those originators, those mortgage originators, to steer families out of the very successful, humble, amortizing fixed-rate mortgage into this predatory, exploding interest rate mortgage, all the time posing as a family's counselor, saying it's my job to do what's best for you. So why did this predatory practice in 2003 that grew enormously over the next 4 years, why did it go on? What happened to oversight of fairness? And what happened to the agency that was supposed to shut down predatory practices? Well, that agency, Mr. President, was the Federal Reserve. Now, the Federal Reserve is a very powerful organization. The Federal Reserve has two responsibilities: employment and monetary policy. Those are the traditional responsibilities, but they were given a third, which was consumer protection. So somewhere in that vast, powerful agency, up on the upper floor, the head of the Federal Reserve and his key advisors were hard at work on monetary policy, deciding what interest rates that they would lend to our major banks. And they were hard at work, we would hope, on the employment side as well. But they seem to have forgotten that they were also responsible for consumer protection. That mission was set aside. It was put down in the basement of the building, and the doors were locked, and the lights were turned out, and they did absolutely nothing about these predatory practices that were destroying the finances of millions of Americans, that were betraying the fundamental relationship between a family and its trusted mortgage originator who was getting bonus payments for steering them into these loans. And they did absolutely nothing about a number of other predatory practices. And that's why the Consumer Financial Protection Bureau was created. That doesn't have other responsibilities to distract it, that isn't going to take the fate and success of our families and lock that mission down in the basement and turn out the lights. Because this is the heart of why this Bureau exists. So this vote tomorrow is about whether or not you believe in the family value of fair deals that build the success of our families, or you believe in the 1% exercising full predatory practices to destroy the financial lives of Americans, destroy the financial lives of our veterans who are standing up for us in war. We're often a highly targeted group when it comes to these types of mortgage practices and these types of payday practices. So, Mr. President, this is an important vote tomorrow. It's not a vote about the qualifications of the nominee, because the nominee is acknowledged to have just the right set of skills, be highly qualified from a number of directions. It is a vote about whether here in America you believe that it should be okay to be a predator or not okay. I believe it's not okay. I believe that states and the federal government should do all they can to make sure deals are fair, to make sure that there are not conflicts of interest, make sure they're not steering payments that are undisclosed to the customer, to make sure that there are not hidden clauses that say, if I convince you I'm your advisor and I say sign here, that you have now destroyed your financial life for the next 10 to 20 years as a result of that trust. Fairness matters to the success of our families. Mr. President, we should have a unanimous vote tomorrow to end this debate and to get on to the final vote of whether or not to confirm a very distinguished and capable and honorable man who is prepared to fight for the success of American families. Thank you, Mr. President. Quorum.